Welcome to the Explainer. Today, we're cracking open Accenture's latest results for their fiscal year 2025. And let me tell you, the big story here is their massive, all-in bet on an AI-driven reinvention.
All right, before we jump in, just the usual heads up. This is purely for your information. It is definitely not financial or investment advice.
So here's what we've got on tap today. We're going to kick things off with the big numbers on their 2025 scorecard. Then we'll dive deep into AI, which is really their new growth engine. After that, we'll look at how the different parts of the business are performing, check out what they're predicting for 2026, and then wrap it all up with the final takeaway.
Okay, let's get right into it. Section 1, Accenture's 2025 scorecard. You know, to put it simply, they had a really strong year, actually beating their own expectations.
And wow, these numbers really paint a picture, don't they? I mean, look at this. Revenues climbed to nearly $70 billion. That's a solid 7% bump from last year. Adjusted earnings per share, also up, a healthy 8%. But the real showstopper here, you gotta look at that free cash flow. It's up a staggering 26%. That tells you the company is running like a well-oiled machine. Now there is one little soft spot. You'll see new bookings dipped by just 1%. That's basically the pipeline for future work, so it's something to keep an eye on, for sure.
All right, Section 2. So what's the secret sauce behind all these great numbers? Well, it all comes down to one thing, and it's the theme of their entire year: artificial intelligence. This is their new growth engine.
And you don't have to take my word for it. Just listen to their CEO, Julie Sweet. She comes right out and says their 7% growth is all about helping clients, and I quote, reinvent and lead with AI. This wasn't just some lucky break, you guys. This was a very deliberate, very early bet that is now paying off big time.
And if you want to see just how big that bet is, look at this number. We're talking $5.9 billion. That's in new bookings, just from generative AI projects this year alone. That's incredible. It shows you that AI isn't just a buzzword for them anymore. It's a core, multi-billion-dollar part of their business.
Okay, let's move on to Section 3. We know AI is the engine, but where is the rubber actually meeting the road? Let's break down where all this growth is coming from across the company. So if we slice it by the type of work they do, their managed services division, the long-term contracts where they run things for their clients, that part of the business grew by a really strong 9%. Their classic consulting work also did great, growing at a solid 6%. And if we look at the world map, it's no surprise that the Americas are still their powerhouse, making up a full half of all their revenue. Europe, the Middle East, and Africa are next in line with 35%, and then the Asia-Pacific region rounds it out.
Now this is pretty interesting. When you dig into the specific industries they serve, you see strength just about everywhere. Financial services was the real star, growing by double digits, 10%. But the key thing here is that every single industry group saw growth of at least 5%. That's really solid, broad-based performance.
Okay, but here's where it gets a little more complicated. Buried in all that good news is a potential yellow flag. See that health and public service sector? It grew 7% for the whole year, which is great. But in the final quarter, it actually shrank by 3%. That could be a sign of some headwinds coming up in what's a pretty important market for them.
All right, Section 4. So, after a great year, what's next? Let's look ahead to 2026. What they're signaling is a bit of cautious optimism and some pretty big strategic moves. And this right here is the headline. After posting that awesome 7% growth this year, they're guiding for just 2 to 5% growth next year. Now that's a pretty significant slowdown. It really suggests they're bracing for a tougher economic climate ahead.
So how are they planning to navigate these choppier waters? Well, they're launching what they're calling a refreshed talent strategy, and it's got 3 main parts. First, they're pouring money into upskilling their people, getting them ready for things like AI. Second, they're exiting people from roles where reskilling just isn't an option. And third, they're turning that AI lens on themselves to make their own operations more efficient.
And yeah, a big pivot like this is not cheap. Not at all. We're talking about a price tag of roughly $865 million for this whole optimization program. That's a huge chunk of change, mostly for things like severance. It's a massive investment, but one they feel they need to make to reshape the company for what's coming next.
Okay, so let's bring it all home. Section 5, the final takeaway. When you put all the pieces together, the great performance, the AI rocket fuel, the cautious look ahead, what's the one big thing you should remember?
Look, here's the bottom line. Accenture absolutely crushed it in 2025.
They prove that their huge bet on AI isn't just hype. It's a real multi-billion-dollar business that's already paying off. But, and this is a big but, their more conservative forecast for next year, plus that really expensive internal shakeup, tells you they're getting ready for some turbulence ahead.
And so, all of this leads us to the one big question hanging over everything. As the economy tightens up and growth gets harder to find, is Accenture's massive, all-in bet on AI innovation going to be enough to keep delivering on its incredible promise? I guess we'll have to wait and see.